Hey everyone, welcome to the KE Report Daily Editorial on Monday, November 10th. Chatting with TG Watkins. TG is the director of stocks over at Simpler Trading, also editor of the Profit Pilot website. Now, TG, today is a good day for pretty much every market out there. We got news over the weekend that the government shutdown is now over, and apparently that is a green light for investors to put money into practically anything. I'm seeing, at least on my screen, a whole lot of green. The VIX is down quite a bit, now down into the 17, 18 range. TG, I just gotta ask, is this all about the government shutdown finally being over? And I guess people just being able or being willing to put money into the markets no matter what's going on?
Yeah, pretty much. I think so. There are a couple details to pay attention to. Technically, Congress still needs to vote on this, so the government reopen is not a slam dunk right now, but I think that's pretty much going to happen. The other situation was that, go figure, when is the government reopening? After the elections. So both sides, I'm sure, were using the government shutdown as a cudgel to convince their participants to vote for them. And I think both, I mean, just here we are, the rest of us stuck in the middle of what's going on, that they wanted to use this as leverage for the elections. And so, yeah, imagine that 40 something days later, and then it only took a few days after the elections to get the government open. So a little cynical on that, but that's what's happening. Yeah, and I think that the market is rebounding partly because the market underneath the surface, because the SPX doesn't actually look that bad, but if you looked at some stocks underneath the surface, the risk on names, the speculative, some of the AI, crypto, things like this, nuclear names, yes, they were getting way overbought. They were definitely getting way too high and too extended. And so we were looking for a pullback and the 1-2 punch of these things needing to pull back anyway. And then with the government being shut down, initially not a problem, but as it went longer and longer, liquidity just started drying up because basically you do have a lot of people who were not getting paid. Just money was not flowing. There was not liquidity. And then you could look at the Treasury General account, and there were some stats and statistics. We've seen this back before in 2020 that when they shut off the spigot, basically because the government shut down, the money inside the Treasury General account starts to fill up and up and up and up, and it just builds up. It's not in the economy, it's not in the market, it's not moving around. And then they can show that when they open it back up and starts to flow, you can see risk on assets actually start to move up. So I think that is what we're going to be seeing, and that is why we actually started to see the market move up on Friday because it was starting to sniff out that the market was going, or the government was going to reopen because they were going to start these talks. Now, part of this, if you guys want to send anybody over to my YouTube page, it's a Profit Pilot from Simpler Trading. I actually talked about this weekend. I even talked about it the previous weekend because I think this is what's going on. I do have some charts that I can show you inside of that video as well if you guys want to check it out.
Well, TG, another thing that you'd mentioned to us off mic is that even though we saw a little bit of a bounce on Friday and then a nice, follow through today on Monday, you're going to be looking for a retest on many of the charts to key support levels just to confirm that this isn't just a fluke, but that there's actually some meat behind this. So maybe talk about why you want to see a lot of the charts go back and retest support.
Yeah, because I mean, look, if you look around, I know you guys like your uranium stocks. So if you look at something like that, a lot of these stocks were in just an absolute free fall for the last week, maybe even 2 weeks. And the most that we saw on Friday was kind of a V bottom that they turned up on Friday. Cool. And now today, because of the news, we're kind of seeing a continuation of that Friday move. Okay, but all that is a bounce in what was a very sharp downtrend. And right now, if we look at some of the lower time frames, like the hourly or the 15, we are just up. We're not actually trending, and we are still underneath things like, again, we are still underneath a downtrending hourly 50. Now, I think that this is the bottom. I do think we are going to start seeing these things turn back up, but there is a process that has to happen, and technically we are still underneath downtrending moving averages on the lower time frames. So I think that the market could still kind of do some hammering out or shake and bake or whatever to kind of, get themselves positioned, because when something like Quad U has been in a downtrend since, or pullback, I'll call it a pullback, since October 15th, these things, even though we're going to start moving back up, they don't just turn around in one day. They take a few days to actually change these moving averages and get back in line with them to the upside.
Is there a rule of how long change in this trend could last then, TG? Do we need to look at the hourly chart, or is it something we should look at on the daily or even weekly chart?
There's not really a rule of thumb for how long this takes. I mean, you can look at something like A FRM, and even though it has been down over the last few weeks, the speed of the down move has really slowed, and it's starting to turn. Some of these things can turn up right away if they want to. Others will take some time to kind of hammer out the lows and figure themselves out and whatever. So no, there's no really rule. But if you're looking at the daily chart, the best I can give you is look for when the 8 EMA crosses over the 21 EMA. I still find that to be a little bit slow, which is why I like to use at least the hourly chart to look just a little bit lower. And usually what I look for there is first 8, the 8 EMA crossing over the 21 EMA, and then I want to see price not only get over the hourly 50, because that could be just a bounce and a downtrend. I want to see price follow an uptrending hourly 50. Now, I know that's very technical and whatever, but that is exactly what I teach. So I just gave you guys all kind of a freebie for what I do and how I really actually look at these things. I know it's simple in principle and sometimes harder to execute, but really we do try to make it pretty simple about is it in an uptrend or is it not? And these are simple ways of doing that using these moving averages.
Well, TG, I guess that's why they call it simpler trading. But good advice for people here. Just a
Yeah.
question for you though, just as a technician, a lot of people will mix what's happening in the markets and macroeconomics and look at those through the lens of their charts, but other people are purists in the sense that they look at a chart, they don't really care what's happening. It doesn't matter that the government shut down, or it doesn't matter a fundamental for a company, an earnings report. They strictly look at the charts. How much do you mix in the macro along with your charts? Do you like them to line up, or do you look at the charts in isolation?
I do think if you look at the charts in isolation, you will know quite a bit and you can get pretty far with that. But I think in situations like this, you do need to know a little bit of what's going on. Like, I don't read the news or I don't have to figure out what's going on in this and individual stocks and everything. But it is good to know just what's happening in the world or just around you because it does affect the market. I think that a lot of these things, I was a little surprised at how much some of these things really went down, especially over the last week because they were pulling back more than I was expecting them to. And I'm like, what is going on? Like, there's really no reason for them to be doing this. And then it kind of became apparent, like, okay, it's the government shutdown situation. That's really causing some problems. It's going longer. People are getting upset about the SNAP situation, the airport situation. Like, this is getting to be really bad out there. And while the market can kind of handle whatever certain things in society, the fact that then we could look at this and say, oh, I think this is becoming a liquidity issue. I think that the gears are just grinding up and the Treasury General accounts being a problem. And just this backlog of cash is having a problem. It's not getting out there. And so we started to see this. Like there's a problem with cash flow. And so I think that was part of what was happening. And there could have been a little bit of market manipulation because I'm looking at some stocks and charts and it's like, okay, the election happened. Rumors were starting to show up that, okay, the politicians were going to start negotiating with each other about opening up the government. And right as that was happening, kind of early mid last week, was exactly when the market decided to thrust some of these names even lower right into the news of the government reopening. So I think that they've said, okay, well, if we're down, let's just push this a little bit further, grab some liquidity, stop some people out, and we know the government's going to reopen, and then we can flip it back around. So, I think there's a little bit of that too.
Oh, we've seen that happen over the last little bit, and very well could be. I guess we'll just watch to see where this kind of plays out if we get another test. And one other thing to consider is that Trump is also out there telling people that they might be getting $2,000 in their bank account for a tariff dividend. That also is, in a way, stimulus money that could be helping to this rebound. Let's quickly look at the precious metals. You know how much we like to talk about those, and I really like getting your technical outlook on them. Gold, silver, GDX, SIL, really across the board. It's all bouncing today after a pretty quick correction. The question being, is that the end of the correction? How are you trading this, TG?
It's still a little bit too early for me to fully say that this is ready to go right back up. I think that gold and silver and GDX were going just straight up into October. I actually shorted GDX. Let me pull that up real quick because I think I told you guys that. I shorted GDX on October 10th and then I added to it on October 20th. And then I took off my positions after having a good win on October 21st. Yeah, so it was like finally once it worked, it was like a 1 or 2 day trade. And then since then I just said, okay, there's nothing for me to do. It pulled back sharply It's no longer overbought, and I don't exactly know where it's going to go yet, so I'm just going to let it hang out for a while. Well, it did put in like GDX put in a double bottom from October 27th to November 4th, and now we're up. Great. It's kind of the same thing I was talking about with these other stocks is you're starting to see them move up, but I'd like to actually see a little bit more confirmation. And something like gold and GDX and silver, while they happen to be up, I don't see them really just running away to the upside again right now. I think that they could still use a little bit of a breather. If you look at actually GLD, for example, it only pulled back to the weekly 8 EMA, which is great. But if you look back to May and June and July, you can see it actually flagged along the weekly 8 for 3 months. And so I think it could totally do that. So I'm not really in any hurry of jumping in on this. If you guys bought the dip, cool, probably going to be fine. But I just can't totally say that this thing's like ready to go higher right here, right now.
Just a quick follow-up on silver in particular. It's kind of been a little bit wild in the last couple of weeks, which is normal for silver. But it got up to, on the futures price, it got up to 53, $54. Then it fell down to 47, and then it's bounced back up to 50 here. Pretty big move here, though, up 4% today. When you look at silver, do you look at it through the SLV or do you look at it through futures? Any thoughts on the volatility and what it may be doing?
You can kind of look through it on either. I just use SLV. I think it's fine for me. It tells me what I need to know, which is that I could tell into October it was getting extremely extended, just like gold. I saw this happening through everything, which is why I just decided to short GDX because I could get good percentage with GDXU and shorting that. And you're looking at silver, it's basically pulling back again like gold into the weekly 8 EMA and kind of getting close to the daily 50 SMA. So it is in temporary support, but I don't know if that support is going to be what causes it to go up even more right now, or if it actually needs to kind of chill out, flag for a little bit, and just digest the really, really big move and then the subsequent pullback that it had.
TG, on something like GDX, do you watch or play gaps at all? Because there was a pretty big gap that was put into that chart back on the 21st, which this rebound right now, first of all, it's putting a little gap in the chart to the upside. It's also working to fill that gap. Do you care at all when you're trading about these gaps and them being filled?
Sometimes, like for example, the SPX had a gap around the 24th and 27th, and I was expecting that to get filled, which it did. And then we kind of see if there's anything else that needs to be filled. Gaps for the most part do get filled. The question is kind of when. And if you're looking at GDX and saying, well, we still have more room to the upside until that gap is filled, sure, okay, maybe that'll happen, but I don't know if it needs to happen in the next 2 days or if we pull back from here and it happens 2 weeks from now. I think actually, if you look at UNH, it's kind of in the healthcare sector, and there was a gap all the way from, back in May, and I'm actually long UNH and I was trading that. It got into that gap right around September, filled it halfway, then pulled back, and then actually filled it all the way in October. So yeah, I think it'll get filled. The question is when, and that's really what depends on your setup in your trade. If you need it to be filled in the next day or two, well, that's a different type of trade than if you need to be filled in the next 3 weeks. That's how you set up your particular trade.
One more commodity ETF to run by you. I think that you follow this one, but COPX, it's the copper producers. It's been running a lot higher, even though the copper price underneath it has been really just kind of treading water sideways. And it's been bumping its head up against, kind of some highs it's made recently. Any thoughts when you look at the COPX chart?
Well, yeah, this is actually kind of what I'm saying with silver and gold. If you actually look at COPX, it's been doing actually quite a nice pullback in kind of a wave fashion. It got overbought, came down, bounced a little bit, came down even further, bounced a little bit, and I think it could even pull back a little bit here too. So I just kind of see a wave pullback, and I think that's kind of what gold and silver and GDX could kind of do is either it's going to be kind of a wave to the downside or it's come down, found its level, and it needs to kind of continue going sideways for a little bit. I see that these things are up, but for me, they are not actually in a uptrend yet. They are still in a pullback situation. And a little detail that I use is I like to see prices hold and trend with the hourly 50 SMA. And something like COPX, it is over the hourly 50, but it has not trended or followed with the hourly 50 yet. So little details there that tell me that it could still be chopping around, flagging, resting a little bit, and it's not quite ready to resume its uptrend.
So TG, let's just back it up here and just ask where are some of the best uptrends that you're seeing. It sounds like you're in mostly a wait and hold for a lot of these markets, but anywhere that you're not chasing but playing that's moving higher.
Yep, I still have quite a few positions on. Some of them pulled back significantly, so I might actually take this opportunity to add and buy the dip and add to my dips. I'm still pretty much a fan of the crypto stuff like Ethereum, BMNR, Bitcoin to a lesser extent, and then maybe Solana if you want to get a little bit crazy with them. I think that this pullback that happened in the crypto market, I think is actually pretty good. I think this is a buy the dip situation for them. So I am waiting for them to hammer out their lows. But another thing that if you guys go and check out my video over the weekend at Profit Pilot on YouTube, I spoke about this. I showed going into Friday that the like Ethereum in the crypto market actually put in some positive divergence compared to the Nasdaq, the SMH, and the SPX. So I saw that things like that, the risk on assets, already got hammered ahead of the market, and we're actually starting to put in lows before the market put in lows. And then we got the news about the government reopening and now they're up. So I do think that is an area that has bottomed. I think a lot of people have gotten wiped out in that area. And I think the big funds and firms have come in and are starting to buy it up. In fact, something like BMNR, which is like a treasury fund for Ethereum, I heard that JP Morgan came in and bought the whole bunch of stuff. And then I hear that BlackRock might be coming in and buying some stuff. And we already know that Peter Thiel is in that stock, and we know that Kathy Woods from ARK Invest is in that stock. So I'm all over that one. And I think that, yeah, I think I'm going to be eventually buying this dip. As far as other things that are still going up, yeah, there's still some things. SKLT is another ticker. You can look, I think AFRM is going to be moving up. You can look at, I think Robinhood eventually is going to be fine. I'm still looking at things like Grab. That thing's just been flagging, even though the market's been down. I think it's going sideways and looking pretty strong. Yeah, I'm still pretty interested. Tesla, even though it went down after they had the Tesla's shareholder meeting, which is pretty common, buy the rumor, sell the news. I think it's going to go up eventually. It's just a matter of time. So it's still good out there. We're still in a bull market. It's just that the government shutdown lasted a little bit too long and started to affect the market, and we kind of watched a waterfall over the last week.
So nice that that government shutdown is now over. I know when Chad and I were traveling to and from that New Orleans investment conference, a lot of people were worried about getting home and even getting down there. But I think most people made it back okay. There were some flight delays, but overall, look, get everyone back to work and let's let some other factors drive these markets. But as you said, still seemingly bull markets. We'll see if any of that changes when we chat with you in a few weeks. Again, TG Watkins, Director of Stocks at Simpler Trading, also editor of the Profit Pilot website. Click the links in the show notes to follow along with TG. TG, always appreciate your comments. Thank you so much for your time today.
Yep, thanks, guys.